Hello and welcome, I'm Suyash Maheshwari and you are watching Last Tick here on News9 where we break down the day's action on the Lal Street. Now, Indian markets have started the day, actually kicked off the week in the red amid lack of positive triggers and a slump in frontline banking stocks. You know, the headliners started the day slightly higher with the Nifty trading above the 21,800 mark. But a lack of follow-on buying led to a sharp correction and the index gave away about 200 points from the day's high in the first hour of trading itself. From there on, the index, I'm talking about Nifty here, continued to form lower highs and lower lows throughout the day and even broke below the 21,600 for the first time since January 31st. Nifty ultimately settled with cuts of about 0.76% and ended just marginally above the 21,600 mark. Now, today's price action potentially marks a departure from the previous bullish trend as the index has been forming lower highs and lower lows in the last three trading sessions. Making a further case for the bears is the fact that Nifty has failed to defend the 20-day moving average on a closing basis after a gap of 8 sessions. According to experts, the next big support for the index, Nifty, will come in at 21,500, which is the lower band of the broad range the index has been trading in for the past couple of weeks. A break below 21,500 could further roil the sentiment from here on in the medium term as well. Sensex also gave away over 500 points and closed marginally above the 71,000 mark. This is the lowest close for the index since January 25th. The broader markets were worse off. Nifty Midcap 100 fell 2.5% and is now on a 3-day losing skid. Today's close was also the lowest level for the index since January 25th. The small cap index gave away over 4%, marking its worst single day fall in over a year. What's more worrisome is the fact that both mid cap and the small cap indices were seen forming a bearish Marubozu candlestick pattern by about 3:20 p.m. in today's trade. I mean, there was a bit of a pullback, but all in all, both indices were forming a Marubozu candle, which is an extremely bearish signal and suggests a strong likelihood of a continued downtrend from here on. Now, let's talk about what led to today's fall. It was first the usual suspects in banking stocks. Both PSU as well as private banks fell today, and in fact, ICICI Bank, SBI, and HDFC Bank alone were responsible for 3/10 of the entire fall in Nifty today. Nifty Bank on the whole also shed about 1.5%, in fact over 1.5%, and closed below its 200-day moving average for the first time since November 2nd. PSU stocks also took a beating today. BSE PSU index fell almost 5% today and eroded the wealth of investors by about 4 lakh crore. And with this, the index has corrected by about 6.5% in a matter of just 2 sessions. Information technology stocks, however, bucked the overall weak trend that we saw in the market and logged some gains. Nifty IT index became the top sectoral gainer, backed by positive cues from its Wall Street peers. Expectations of easing macro conditions as the US Federal Reserve moved closer to a rate cut and taming inflation. But to understand what's going on in our local markets and what are the important cues to track, let's also bring on board Mr. Avinash Gorakshakkar of Profit Mart Securities. Sir, thank you for joining us here on News9. Always a pleasure speaking to you. What are you making of these wild swings that we are seeing in the market, and how should investors position themselves during such times?
See, Suyash, I think markets are going to be volatile largely because I think everyone is aware that we are now in a phase where elections are going to be announced very soon. And just ahead of the elections, I think the markets always tend to be volatile. And I think the way the markets have seen, a rally post the state election numbers coming out, I would say that, today's correction was more or less on anticipated lines. If you look at the PSU banks, if you look at the public sector utility power companies, the defense and the railway companies, there was all around selling right from morning. In the morning, we saw a small uptick, but then thereafter, the momentum continued quite significantly. So I think my guess is that, this is a large bout of profit booking. This is not a panic sell-off. Corporate numbers clearly indicate that companies have been doing very well. In fact, during the market today, Mazgaon Dock came out with very strong numbers. So I think, markets are definitely, going to obviously respect data points, quarterly numbers. But wherever prices have shot up significantly and valuations have gone very significantly upwards, there is bound to be some correction. And that is exactly what has happened today. On
Hmm.
the defensive side, we saw some buying on the IT companies, but my sense is that IT companies are unlikely to show any massive re-rating at least for the next 3 to 6 months because headwinds in the US and Europe still continue to be challenging. Margin pressure is going to be there. So I would say that most of the sectors which have been beaten down, like PSU banks, capital goods, real estate, automotive companies, for that reason, I think defense and power companies, railway companies, these are all good bets provided your investment horizon is slightly for a longer period of time. See, investors have made a lot of money in a very short period of time. So a lot of momentum investors have got out. The
Hmm.
real, I think, investors who want to actually cash in could obviously look at some companies, on declines. If the fundamentals are strong, I would not be surprised that these companies would get further re-rated. But yes, in the near term, the index is now going to be on the downside. I think 21,500 looks very much possible because a lot of money is possibly likely to be booked out. And after that, possibly the market would consolidate, and one again has to then stick to company specific. So I would say that this trading day today has been volatile on the negative side, but we'll have to wait and watch how it proceeds. But I'm pretty confident 21,500 would be a kind of a good support at least in the near term.
All right, and as you rightly pointed out, a lot of these momentum sectors now they are seeing some bit of a profit taking from here on. Anything that looks attractive to you from a valuation standpoint, Mr. Gorakshakar?
Yeah, I think we have players who like data points, and in
Hmm.
fact we don't look at market swings on a daily basis. But I think within the mid cap category stocks, companies like Anantraj at 342, I think very strong numbers, Suesh, very strong commentary from the management, and I think they have a unique combination of both the data center and the real estate business. So I think it's well poised to do well, provided one can keep a time frame of 12 to 15 months. Then there are some interesting companies, from the IMFL and the liquor space and the ethanol space. We are suggesting to our clients a company called Associated Alcohol, extremely attractively valued, and I think a debt-free, virtually a debt-free balance sheet and very strong cash flow. So here also, the stock is trading at roughly about 12, 13 times 1 year forward numbers. So this could be also a defensive bet. And yes, I think from the large caps, we still continue to suggest stocks like Cummins, or for that reason something like a Tata Motors. These are companies which can actually generate a very good alpha over the next 12, 18 months, because we feel that there's a lot of earnings growth left in these companies, which will obviously translate into better bottom lines, and obviously stock prices could get re-rated.
And what about the private banking names, because they have of course corrected significantly since in the past 1 year or so, and especially when you compare it with the PSU banking names from a valuation perspective, how are these big private banks looking?
No, I think, see, if you look at the quarterly numbers, Suresh, I think ICICI Bank, Axis Bank, IndusInd Bank, we continue to, suggest these names for a long-term perspective. But I think within the PSU bank category also, we would say that, banks like SBI, Bank of Baroda, Canara Bank. In fact, SBI has been, our stocks which we have been suggesting your channel quite early. But now
Right.
post the results, people were little negative, but still the stock has got re-rated because there's been good amount of fund buying here. So I think the larger banks, especially the PSU banks, would do it. The smaller ones, I think one has to be a little wary. In fact, there was a lot of selling today in Maharashtra, Bank of Maharashtra, IOB, Union Bank, Central Bank. So I think the smaller banks could get a bigger brunt of the selling pressure. But larger banks and larger private sector banks would definitely do well, considering that we are looking at a 6.5% GDP growth, and all this infrastructure spending is obviously going to benefit the banks, because obviously most of the corporates would come for funds to these banks. So I think banks would also be a good inclusion in your portfolio.
And sir, while you were talking, we were flashing the correction, the number or the single day falls of some of the PSU worst hit PSU stocks today, and some of them fell as much as 20%. I mean, on a day like this, can we just call it a day of normal profit booking? Because I mean, a 20% fall bound to shake some of this conviction in the stock, isn't it?
No, I think, see, the way the stock prices had gone up also, Suresh, I think you must also understand one thing, that these PSU stocks, specifically from the railway basket, from the defense basket, from the utility baskets, the re-rating also was very sharp in a very
Hmm.
short period of time. So obviously on the downside, these are momentum traders who are basically booking out their profits, or maybe, they're selling out in panic. I think clearly let the water settle down, because these companies have got good order books on their on their companies' balance sheets, and I think once numbers come in, definitely the market would respect the numbers. But yes, in the near term, these kind of falls are inevitable because the price initially had also gone up very fast. So nothing surprising, in a volatile session when stocks have gone up so fast, they obviously come down also equally fast. So I think
Hmm.
investors need to be careful, of course. But yes, I think that's the reason they should not buy everything and anything at whatever price. So I think valuations now will have to be selective, and you'll have to be a little careful in what you want to buy.
And so, I mean, what should be the ideal trading strategy for people who are looking to get on to this PSU stock bandwagon? Should they continuously buy with every dips, or perhaps again wait for the dust to settle, as you just said?
No, I think from the larger PSU banks, we still consider, that stocks like Bank of Baroda, Canara Bank definitely look to be good bets even at current prices. If there's a fall of 5-10%, I would suggest don't invest all your money in one shot. I think use a SIP strategy and deploy at least 10 or 15% of your capital as of now. And I would suggest that this could be a very prudent strategy, because once elections are over in month of May, we get a new government and obviously the new budget is presented. I would not be surprised, Suresh, that the markets would further get re-rated, because the margin of victory for BJP this time, if it is up beyond 100, 400 seats, I would not be surprised that they could see another bout of big re-rating happening. Till that time, I think you've got to face the volatility, which is quite a, which is a part and parcel of this market.
And any risk factors that you're seeing at this point in time? I mean, the oil prices, Brent crude is back above $80. The 10-year yields, the US 10-year yields are, inching higher. The dollar index is once again gaining strength. Anything that is looking, particularly concerning to you?
No, I think, see, oil prices are not a big concern. I think my guess is that oil prices still around $82 a barrel are still manageable. At these levels, even if the oil stabilizes, I think that would be good enough news for a lot of, crude oil dominated kind of companies, specifically the oil marketing, upstream companies, and of course, related sectors like paints, carbon black, lot of sectors which actually depend on crude oil. But my sense, the biggest fear is that if inflation, picks up, because inflation is one area where, globally also it's not yet come down to, expectations. Even the Indian context, I think, probably we would be taking some kind of indications from how, the US market reacts to inflation. Once
Hmm.
the US Fed starts cutting interest rates, that would be a clear signal that the inflation trajectory is now on the downside. So I think we'll have to wait for 3-4 months. But I
Hmm.
think this is the only fear which I think the markets have, because I think liquidity is very comfortable both from the domestic funds, both from the FIs. And I think India is now emerged as a very large growth market. So I think, even the FIs are aware that this is a market which could actually make a lot of money for them.
All right, and of course, inflation is a concern, and that was also highlighted by Mr. Shaktikanta Das, who said that inflation remains the key focus of the central bank. Until that there is an ease in prices, they won't go for a rate cut. So, as a house, as a brokerage firm, how what sort of rate cuts do you expect in FY25, sir?
No, I think my guess is that very conservatively, Suresh, we should expect at least a 50 basis point cut. I think, as of now, because I would not be able to tell you immediately over the next 12 months, but as inflation trajectory comes down, at least the broad market expectations is that at least, we will start with a 25 basis cut, not a very aggressive cut, but I think it could go down to 50 basis point, and hopefully if inflation cools off further, then you could expect another 25 basis cut. I think that is what the markets are expecting, and I think this is something which the markets would be overjoyed, because whenever inflation, interest rates are cut down, that translates into better earnings for most of the corporates. So I think markets are still in waiting mode. Maybe we'll have to see until May or June for the first cut to happen.
And sir, before we let you go, does RBI wait for Fed to go through with a rate cut, or we diverge from here?
See, I think technically speaking, we always see that the governor always take a global perspective when he talks about local inflation here. So I think it will be a wait and watch. I think my sense is that it's not easy to say whether he takes the Fed commentary as a benchmark. But I think yes,
Hmm.
if inflation here cools off much faster, then I think clearly I wouldn't be surprised that interest cuts rate could happen a little earlier. But for
Hmm.
that we'll have to wait and watch, Suresh. I think it's not going to happen at least for the next 3 months.
All right, no cuts for the next 3 months at least. That's the word coming in from Mr. Vinash Korakshakkar. Sir, always a pleasure speaking to you. Thank you for joining us here on News9. And with that, it's a wrap on this edition of Last Tick. But stay tuned with us as we'll be right back with Business Plus.
जैसे है ना वैसे ही एक मूवमेंट चलना चाहिए मेड इन इंडिया
Nowadays you're seeing there is a color palette, a theme and even a whole designer concept to the wedding.